Ladies and gentlemen, good to see you again. Good to have you back for the live show. Hopefully there'll be lots of you joining us today to enjoy a fine live show together with us, because today I want to talk a little bit more about the stop loss and how you work with the stop loss and the risk and your entry and exit points. Rather important. I hope you're all having a profitable week and everything is going according to plan. Let's have a look. Let's see how things are going at the moment. I mean, how are things going at the moment? I know that I took a long trade on the US dollar South African rand because I thought the South African rand might weaken, and that's not going well. I'll show you that in a moment. The US 500 is doing nothing. Brent crude oil is at least kind of milling around and, not losing. So that's okay. I'm actually long on this. I know I shouldn't be, but I am. Everyone would normally call this short because these would resolve to the short side. But yeah, I'm long again. I don't know. We'll see. We'll see how that goes. I've noticed a lot of traders losing in the markets this year. Let's see. I called New Zealand dollar, US dollar long again this morning because this has gone back up into its bullish trend. Look at that. Went straight back up into its bullish trend. Broke out, hit the daily support, went back up, right back into its trend, as if it never left. And it's just heading on up. This is obviously due to all the things that happened last week and went wrong and went crazy and drove everybody insane. How's it, Shane? And hello, Rick. Good morning from Baltimore City. Wow, welcome. Good to have you, man. Good to have you. Germany 30, we are still going up. I mean, yeah, you've got this little bit of a red candle here, a little bit of a down, but it's in a bullish trend, and it'll probably follow the S&P 500, which is kind of just going up. There's nothing really at the moment that I can see that's going to pull the markets down just yet, unless everything all goes pear-shaped again, or somebody says something silly again. For the time being, it seems to be holding up quite well. Let's just have a look at Bitcoin. For those of you who trade that, it's just sitting between the 100 and the 110. Also, not doing a lot, not doing much. I noticed a lot of traders taking a lot of heat this year. And the reason for that, guys, is because most traders do not separate the lines from the strategy. Most people are still struggling with that. Most people are still struggling to separate the lines from the strategy. I call it in every video. I try and tell everybody in every video, you have to understand that this is a system. This is a system. Let's say you use price action. You could be using Ichimoku. You could be using Fibonacci. It really doesn't matter. It's just the system. And the system gives you a line in the sand, and it gives you a high probability trade. So you can choose where you want your trade to be. You can choose where you want your stop loss to be. And you can look at the market for what it is, take a trade. And you can generally feel quite confident that you're taking the right trade that's going in your favor. So, for example, this is gold. Bearish. It's breaking out of the structure. It's breaking out of that downward trend. There's a trend here, and it's breaking out of it. If that candle's closed and there's a green candle here, it's a long trade. So now, when you take this trade, you're kind of confident that it's a good trade in your favor. You're kind of confident that this trade's going to work out for you. When it doesn't, you're a bit shocked, but there you go. But then you have to walk away from the lines and start putting your strategy in place. And that's where it becomes important. That's what we always forget. Shall we have a look at what's on the news today? And just out of interest, I just want to go and see here. We can see what's on the news today. If there's anything interesting, if there's anything going on that might be of interest to any of us, I don't know. Richest 20% get an average $6,055 income boost in Trump tax bill. Trump's proposed tax bill taking an average of $560 from the bottom 20% of taxpayers while paying $6,000 to the top 20%. I'm sure you guys in the USA must be so chuffed with that tax situation. Trump threatens to send Japan tariff letter. Buyers of Xiaomi's SUV rival to Tesla phased. Chinese AI chip makers plan 1.7 billion. Look at Nvidia, by the way, guys. That's my favorite investment. I'm invested in Nvidia. And the other day when it was going down, everyone was laughing at me and saying, you see, your share's going down. Look at it now. That's what I love about investing. You see, the thing is, guys, the trick to making money in the markets, the real trick, is time in the market. To invest in shares and leave them and forget about them. They'll make you money over time. Trading is to take away a bit of the boredom, and even that's boring. Trading can be quite boring, which is why you end up trading on 5-minute charts and losing all your money. Trading's much more difficult, though, because to time the market is near impossible. Nobody can really time the market, and that's why I keep telling you guys that at the end of the day, it's not about a squiggly line or lines or anything like that. We can look at this. This is another one of my trading platforms. I'm losing $133 here. I've only got one trade going, and that's this United States dollar, South African rand. And look at it. I took this because I drew a line in the sand and I said, ooh, that's going to be profitable. And I went long. And also a lot of things in the back of my mind saying that South Africa is not doing that great. How this is happening is beyond me, but this is what happens. Now, all you have to do is manage the trade. So what we've done, we've taken the trade. It's in a loss. There's the stop loss. Just leave it. Don't dollar cost average. Don't move the stop loss. If it gets there, then when I put that stop loss there, I put it there with a belief that when it gets there, that's going to be the point where my trade becomes totally invalid, and I'm not going to change it. That's it. It's going to stay there. And there's my profit target. That's it. That's all you worry about, guys. And then you walk away from it and leave it. And maybe I'll come back this afternoon and it'll be in profit. Who knows? You know, that's how it works. That's how it goes. It's one of those things. So how's it, Told? How's it, Sabria? How's it, Elaine? Oh, power outage. That's why I have little things in place that have lithium in them, and they keep my stuff running. If you're a trader, you need to keep your stuff powered up. That's a big problem. And in South Africa, I've learned to do that because we have a thing called load shedding. I don't know if you guys have seen load shedding or heard of load shedding, and it's where they switch your power off for a couple of hours because the grid is under pressure. Sometimes 4 hours, sometimes 6 hours, generally 2 hours. But we get a schedule that tells us your power's been switched off from that time to that time. But if your power's off and you're a trader, it's kind of difficult to work. So I have these little backups keeping me going, keeping my power on all the time. Because, I mean, you can't have a situation where your power just disappears. It's insanity. So I hope your power comes back on soon. And Nick's asking how many accounts do you have? About 5. No, wait, 6 with my, I forgot about the investments accounts and that. Yeah. Got a couple of investments accounts as well, yeah. So no, I got quite a lot, don't worry. I mean, I've been trading for 33 years, guys. I mean, obviously I'm going to add accounts as I go, and some of them are dormant, some of them are working, and, you know, it is what it is. Right, okay, so where was I before I forgot where I was? Talking about something again. So yeah, no, that US dollar ZAR, I took it on that account, and it's not doing great. I can't show you that other 100K account. That doesn't come up here. That's kind of weird. And I don't want to put the MetaTrader up because that's like my bank account number on it, just about. I don't want you to see that. Right. But power outages. Yeah, I was talking about power outages. Power outages can be quite a problem if you're a trader. You need your power to stay on, or you can use your cell phone, but it's rather difficult, and you want to be able to work. So I put all these things in place where If the power goes off, that stays on. That said, South Africa's been pretty good with the power this year. This year, we haven't had much load shedding, and the power's been on. They've managed to keep the power on, which does concern me a little bit, because how can it go from absolute disaster to suddenly we've got the power on? You know, what's going on there? You know, are we under pressure and they're just hiding it? I don't know, but you know, because I always worry if the grid goes down, it goes down. The whole, you know, the country could be down for a long time, and then I can't keep the power up. Then I've got to do something else. I wanted to put a whole solar system in and all the rest of it, but I don't need it. Actually, I just keep these things charged up and I keep the house going, and it's fine. And I just work off the normal grid, and that works fine. That works absolutely fine. I'm going to go over stop loss. I'm going to go over entry and exit just now. I'm just waiting for a few more people to come on board, and then we can go over the training for the day, guys. We can get into the training. And by the way, the giveaway's on hold at the moment. We're not doing that this week. That's on hold at the moment because Fund Your FX is not sponsoring another account for the time being, and I'm waiting for some changes there. So we'll see what comes next. Okay. Right. Yeah, so like I said, I'm going to go over the stop loss on that in a moment, and then we'll talk about that, and we'll figure that one out. And then also, like I said, I've got many accounts. The investing account is the best one. Look, investing is quite simple. I'll show you guys quickly. Hang on, let me go back here. If you go to this investment calculator, it's free online, and you put in how much you want to put in per month. Your return rates on investments on shares should be at least 25%. If not, I don't know, terrible choice of shares. Don't choose penny shares. Choose the good ones. Choose the Amazons and the McDonald's and the Nvidias and things like that. You know, put a contribution in every month of whatever amount. Doesn't have to be $1,000. Can be $500, whatever you want. Let's say you can afford $500, and put it in for 30 years. Put it in for 30 years, and you calculate it. Look at what you get after 30 years. You start on $20,000. You put $500 a month away into the account, and you get a return rate of about 25% per annum, which is fair for the markets. You'll end with 37 million, 37.5 million. Now, I know that in 30 years, inflation's going to go up and all the rest of it, but not to that extent. Not to that extent. And in 20 years, you can normally add a zero. But that's about it. So you'll have a lot of money. If you just invest in shares for 30 years, you'll do really, really... Jacobs Coffee Maker, brand-led strategy. You know, Jacobs blows my head off. I love coffee, but Jacobs absolutely blows my head off when I drink it. It's actually quite insane. So, yeah, let's go and have a look at what we can... yeah, let's just put the S&P 500 up there. I wanted to buy something earlier today, and I'm not sure which one it was. I just want to have a look here. Gold is breaking to the upside, I think. Let's just check this out. It did break to the downside, so I'm just going to remove that. Let's just remove that, and let's start having a look at what we've got here. And that is, yeah, that's breaking to the upside. Gold looks pretty long at the moment. Looks like it's breaking up, going to the upside, and doesn't look too bad a trade, actually. Looks like you could get quite a nice long trade on here. So if you were going to trade gold, let's say, I just want to make sure you guys are looking at the same thing as me. Yeah, that looks good. Just got to make sure you guys are looking at the same thing. And just by the way, guys, while I'm here, don't forget, trading's risky. Most traders lose money. If you don't like losing money, you shouldn't be trading. You know, oddly enough, you can trade for as many years as you like. You can trade for 2 years. You can trade for 30 years. You can trade for 10 years. It really doesn't matter. There comes a point when the aha moment comes to you that the charts don't make you money. and that you're going to take losses, and you'll have losing months, losing years, losing days. There's going to come a time when you think that you can't be beaten, and you've beaten the markets and the markets beat you back. You see, you've got to have a strategy. You've got to have a business plan. It is the only way. We cannot beat the pros. And I don't know how to put this to everyone, but you just cannot beat the pros. That you can't time the market. The market will always time you out. We are such a minuscule part of the market as retail traders that what we do is we ride on the coattails of the guys in the big institutions. And effectively, we ride on their money. Timing the market's an insanely difficult thing to do, and you cannot do it with charts no matter how you think you can or how much of an edge you think you have over the market. That's not going to happen. So the only way to make money in the market is to have a risk management plan and a plan to try and make more on your wins and lose less on your losses. It is effectively the only way you can do it. So I'm going to try and buy gold here, so I can show you guys how to manage the risk. And okay, morning Rob, morning Paul, and I will just buy the most popular stocks that Congress buys. As Nick says, the thing is, I think we call it blue chip shares. Blue chip shares are always good. You know, it's don't buy penny stocks. Don't try and, you see, nobody has a predictive capability. Nobody's got a crystal ball. So, you know, you get these companies that come into the market and they're at 2 cents, and you think, wow, you know, we'll take a gamble on that because maybe it will go to $1,000. Then again, maybe it will close. So you're kind of just gambling. You're not really taking a proper trade. The best way to go in the market, and if you want to ask anyone's advice on that, go and ask Warren Buffett. He'll tell you. The only way is to buy good, solid companies that you know are well run by good management staff. You can see there's a future with the company. Get into it and buy that, and that's gonna hold you in good stead. That's how you do it. So anyway, we want to buy gold because it looks like it's breaking to the upside. It looks like it's strong, and it looks like it's a long trade. So now, a lot of you might say, well, it's a bit late to get in that. No, it's actually the right time because it's breaking out of its structure and it's heading to the upside. My risk is, you know, down here. My reward is up there because there's a resistance there. So I'm looking at taking all that gap. So I want to buy. So we're going to buy the market at a very high price of $33.40. Now, do we have a predictive capability? Can we predict where this is going to go to? No, we can't. All we can do is draw a line in the sand. Now, this is a $25,000 account, so I'm going to risk $250 on it, which is 1% of the account. That's what we're going to do. And then we're going to position the trade. Now, the stop loss we're going to put at, and this is how easy it is to work it out, guys. We want a $250 stop loss. I want my stop loss to be below that low at $32.42. So I'm going to put the price in here, $32.42. On 0.03 lots, that puts my stop loss at $294, which it's a little bit hot for me. I wonder if it'll allow me to do a 2.5. Oh, it is. It's allowing me to do a 0.25. No, it won't allow me to do that. It will allow me to do a 0.02 though. So that's 196. So do that, okay? Don't put 290, put 196. It's actually better, okay? Always go for the lower side. And just keep it in that range, because all you're trying to do is keep your stop loss around the $250 range, so somewhere between $200 and $280 or something like that, you know. Then you know you're in that range and you're keeping your stop losses in that area. You take profit, you want to put at 34.40. So we're going to put the take profit at 34.40. Now, the trick here is to make sure you're making more on your win than you are on your loss. This is not that good. It's a 1-to-1. This is a 1-to-1 trade, which is really not good. Not great. I'm going to take it anyway. I'm going to take a one-to-one trade. Why not? And then if it gets there, I might move the stop loss up and follow it up, because that's how we do it. How do we exit the trade? We take a trailing stop, put it right up behind it, and then we follow it up. If it goes higher, we take the profit. We buy it, and there we go. It's bought. Now we have a trade. If the trade starts going pear-shaped and it comes back below that, I'll probably get out early at a lower amount. For the time being, I'm going to leave the position in like that. That's good enough. It's fine. We can take a trade like that. There's nothing wrong with it. That's how you take a trade. It's as simple as that. How do you manage the trade? How do you manage the trade is as simple as, like I said, you've got the trade in. Hi, Blue Mango. I used to buy that stock that Charlie Munger bought, but after he died, I switched to Congress. Okay. Yeah, but you must remember Charlie Munger and Warren Buffett just about buy the whole company. I mean, they've got enough money. Well, Charlie and Warren together had enough money to move the markets. Well, the way to manage a trade is effectively entry and exit. So you've taken your entry, you've put your stop loss in, you've put your take profit in. The take profit really should be much more than your stop loss, but sometimes it can't be, and you just have to take the trade. There's nothing wrong with taking a one-to-one trade, because what you're going to do now as manager, if this goes into a profit and starts going up, you're going to move your stop loss up to cost, so then the trade is free. And if it starts going up towards the profit, you move the profit away, just like you would move your stop loss away when you used to do that. Remember? You've all done that. Don't tell me none of you have done that. You've all done that. I've done that. You've all done it. You've all moved your stop loss away. And why would you? Because when you choose the stop loss, that's an area of invalidation. You know, when the price gets there, you don't want to be in the trade. So stop moving your stop loss away and start moving your profit target away, and move your trailing stop right up behind it. Move your stop loss up right up behind the price. And if it comes back and takes it out, you won't be unhappy. You would have made a profit. You'll be glad. You'll have green in your bank account, and you'll be quite pleased with it. So that's how you manage the trade. That's how you manage your entry and exits. You see, when you choose your take profit, for example, when I take the trade, I choose my take profit at an area like, for example, that resistance. That's a daily resistance that I've put in there. I've taken that off the day chart. So I know that's pretty much a high area, an area that it can get to. I also see there's an area there that it's been at, and there's a high. So that's a good area to put my take profit at. And if I'm not looking and it takes my take profit there, it's going to be okay. It's not going to be the end of the world. It's good. But what I would like is when it gets there is to be able to say, oh, it's right there by my take profit. Let's move the take profit away a little bit and keep pushing the stop loss up behind it. It comes back, takes it out, and you make as much money as you possibly can. You don't actually have to exit there if you don't want to. You can also exit early if you want to. A lot of people say, you exited too early and then you're making less on your wins than you are on your loss. Sometimes it's viable depending on what's going on in the background. It might be a Friday afternoon. There might be a war breaking out, and you'll be thinking, I'm not holding that trade over the weekend, not with your money, because I know when I come back on Monday morning, I'm going to be in deep, deep trouble on that trade. So I'd rather not do that. So there are times when you might want to get out of your trades early, and that's also okay. It's not the end of the world, guys. It's not, strict rules are a problem as well. People get stuck on them and it ends up costing money as well. It's important to understand that you've got to use your common sense. Sometimes you've just got to use your common sense. Sometimes you've just got to say, I've got to get out of that trade now, and there's a reason for it. That doesn't mean that every time the trade goes into $50 a profit, when you're risking 250, that you should click sell. I mean, that's ridiculous as well. You want to hold and make the whole profit, not hold and make a loss. You can't be making less on every single trade. But there are those that, are sometimes you have to just swallow it and say, well, I'm getting out of here. This trade's done. US dollar, Canadian dollar is going down again. This one was hard to swallow because that spike took out my stop loss and cost me money. Don't like it when it does that. But yeah, I wasn't looking. Maybe I was asleep. Maybe I was doing something else. My time zone doesn't fit in with Canada, so yeah, that spike kind of zapped me out, and then it's gone in the direction that I wanted it to, and that's what trading does to you. That's effectively what trading does to you on a regular basis. You've got to understand that that's what trading does to you on a regular basis. Nick, you can move the stop to break even when you're halfway to profit or when you feel comfortable. You know, if you've gone a decent sort of level into the profit. So, for example, if this one's in a terrible loss, this United States dollar, South African rand, which I took short, but had this gone into profit, I wouldn't have waited till halfway, actually. I would have waited till it gets above that prior high, that high over there. So I would have probably gone to break even at around 1797, around this level here, because that's already higher than that high. Then I would have taken my level probably to a break even, or even that high there. But that is pretty much halfway as well. So yeah, you can go halfway. That's also a good choice. Or you can just when it's above the last highs and it looks like it's a decent trade. Because those are also areas where, and I don't want to get into this right now because it might be a bit early for a lot of people, but where you can start adding to trades as well, where you can start doubling trades up that are in a profit or just putting another 50% in or something like that, making the trade a little bit bigger and a little bit more profitable. If you see it's running, try and take a bit more profit out of it and try and make a bit more money out of it. You know, like gold, for example, you take it on a 1-to-1. A lot of people say, don't take a trade on a 1-to-1, but you take the trade on a 1-to-1. And it moves up to here. You know, if you want to and you see the trades looking really good, you can add to the trade and make it better, and basically have another trade going up with it. So, for example, if I'd bought in over here, this would have been a second trade already that I would have been buying because this looks pretty good and it looks like a pretty decent trade going that direction. That's what I would have looked at. But there as well, you just have to use your common sense. You've got to look at the trade for what it is. Don't look at the trade for what it was. Look at it for what it is now if you're looking at the trade. When it is what it is. Morning, Daniel. And please make a video adding to trades. I really struggle with that. The trouble with adding to trades is it is a difficult thing for everyone. Everyone struggles with it. The problem with adding to trades, sorry about the swallowing of the coffee, but you know, the problem with adding to trades, guys, is this. And that is you can't just add to trades like you feel like it willy-nilly on every trade. It doesn't work like that. You can't just sort of, and also you just can't add to every single trade. Some trades are just, you can't add to them. So you've got to look for those trades, and this also takes a lot of logic and a lot of common sense. You got to pick those trades where you see, hey, this thing's on the move, okay? So for example, if you were in the US 500, there wasn't a lot of bad news around and it was flying to the upside, you would have to say, oh yeah, no, and the world's in all normality as well. I've got to add to the trade there. I've got to add to the trade there because it's going in my favor. It's going along the right road. Brent crude oil, when it shot up like this, good place to add would have been in these areas. You would have felt like that would have been a good place to add. Trouble is, you know, the difficulty of adding is you get to this point here, everyone's telling you the market's going to 150 and oil's going to become expensive because they're going to close the river and all the rest of it. And then it does this. And that can be quite tricky as well. So you've really got to watch your stop loss when you do that as well. But yeah, I'll try and make a video on adding to your trades, but it is a difficult thing. And it's something that I've kind of left out in most of my videos. And I did try to bring it up at an earlier time, but I realized that it's difficult for someone who's starting out to get involved in adding to trades, because it becomes insanely complicated. And I don't want to complicate it. I want to keep it simple. So I think the first thing you got to do, I will do a video on how to add to your trades, but I think the first thing you've got to do is learn how to hold your trades, learn how to sit on your hands, learn how to be patient, learn how to make more profits and just take the losses. And then once you're comfortable with that, once you're comfortable that you becoming profitable, you're making money and things are going in your favor, then you can start learning to add. It takes time to learn to add. Blue, good evening from over here. Good evening to you. And Jeff, any prop firms you can recommend for trading everything? I can't find any firms that have commodities, Forex, crypto, indices. All three of the ones that I have in my description are like this. They trade indexes, commodities, and Forex, and crypto. Okay, all three of them. So you can choose which one suits you best and have a look at that. But, you know, while I've got those links there and, you know, it is kind of an affiliation, you know, it supports the channel and all that, I'm not a big fan of recommending which broker or which prop firm to you or whatever the case. I'm not a big fan of that. You know, at the end of the day, for me, they're kind of all the same, and I wouldn't trust any of them at the end of the day. I take my profits out as quickly as I possibly can. Any broker, whatever, I try not to leave too much money lying around with them and that sort of thing. So, but guys, I've left some links down there, and they basically, they trade all of the above. If you're in the USA, you're going to have more difficulty because it's heavily regulated there as to what you can and can't trade. I think you can only trade futures or something like that. So, yeah, look at what's available, look at what's suitable. But you know, one of the bigger problems that I find with prop firms is the rules that some of them have are insane. You know, what you're allowed to trade, when you're allowed to trade it, when you're allowed to trade with the news and all the rest of it. The guys that I left in the description allow you to do anything. You can trade over the weekends. You can trade like we trade. You can do whatever you want. You can trade with your own system. You just have drawdown rules and that sort of stuff. And the only reason I warmed up to prop firm accounts and funded accounts was I rejected them completely up until the beginning of this year. In fact, I had no time for a prop firm or a funded account. As far as I was concerned, they were all bad news. And then I realized that there's a insane amount of traders that want to trade or get involved in trading with $100 or $200 or $1,000. And I realized you can't make money with that. You're not going to make money. You need a capital amount. And what funded accounts or prop firms do is they provide that. They provide that opportunity. What they also provide is the opportunity for you to get involved in trading with a little bit of responsibility. In other words, not a demo account, a real account with some responsibility that you want to win to make the money. So whether it be a challenge account or whether it be an instant account, you know, the challenge is to get to the instant account, and then, or if you just buy a straight instant account, you have an instant account. I got a couple of those. Those instant accounts, what you got to do is you got to make a profit to draw the money out, and it's a real account and real money. And if you do lose something. So it gives you that responsibility. The next level, of course, is when you have your own cash in cash accounts and you have large sums of money in there. Then the risk becomes that much higher because you can lose that much more money. And obviously, the psychology changes a little bit. The highest level of pain psychology is when you don't have a job, the buck stops here, you got your cash in the account, and you have to make the profit to survive. That's where the big psychology comes in. Okay. Just wondering how you picked the stocks you're looking at. Thanks for sharing. You know, I look at I look at all of the stocks, all of the Forex, all of the crypto. If there's orange peels here, we trade them. And if it looks like something I want to trade, if it looks like something that's going correctly on the chart, okay? So like I say, separate the chart from the strategy. So you have a strategy that you can trade anything on. And then you have a chart that tells you this trade's going that way. And if I see a trade like gold and it looks like it's bullish, and I see oil and I think, well, at that price I might want to trade it, and or I see the S&P 500 or whatever I want, the United States dollar, South African rand, and I want to pick the trade, then I pick the trade, knowing that there's a 50% chance of it winning or losing, no matter what my system is. But what the system is doing for me, what the price action system is doing for me, is pointing the trade out to me. Then from there, I've chosen my trade. Then I just apply my business plan and my strategy, and I work away from the charts on that. Then the charts are no longer viable to me. Then it's my strategy that's in place on that chart. That's all. I've separated the chart from my strategy. How do I pick the trades? The trades that look like they're going to do something. You'll notice I have a trade of the day every single day on the members area. And there's a reason I have a members area, and that is so that things don't go willy-nilly, because everybody will just inundate me. So it's to support the channel as well. At the end of the day, it's work that I put out every day. I put a video out on my trade of the day, and you'll notice that every single day, 99.5% of the time, I have a trade. And how is that possible? Well, it's because everything is tradable. There's always a trade available if you trade everything. If you only trade gold, then you might not get a trade every day. Okay. Arab, do you make any money from day trading? That's a strange question. Firstly, we position trade. And yes, we do. We make money from day trading usually. Sometimes we lose money from day trading. It just depends on the day or the month or the year. Had to pay $250 for my lessons in June. Yeah, Daniel, losses happen. There's a lot of traders losing at the moment. There's quite a few out there that have had pain. What about when the market is in a trend and once it's pulled back and back on course, you could add? Shane, what about when the market is in trend, once it's pulled back and back on course, you could add? That's correct, Shane. You can do that as well. That's another option when you are adding to trades. You just got to use your common sense. You know, if it looks like a trade that you can add on, you can add to it. If it looks like a good trade. Okay. You know, when you say you missed so many great setup trades, so many trades were missed because of the geopolitics that were going on in the world. For example, the S&P 500 was a good example of that. So many trades were missed on the S&P 500, and now it's going like mad. It crossed 6,200 last night, and I've told you guys at the beginning of the year, the S&P 500 is going to go to 6,600. Maybe even 7,000 this year, but probably now 6,600. And look, it's going to do it. I'm telling you now, it's going to do it. I don't have a predictive capability. I don't have a crystal ball, but I can see what it's doing. And I myself, I'm not in the trade because I got out. I was in. I got out because of all the rubbish that happened the last couple of weeks. And now it's running. And I knew it's going to happen, but I still got out the trade. Okay, so the psychology of it is insane. Daniel, don't beat yourself up. That's perfectly normal for traders. Perfectly normal. It's always going to be the same. That's not going to change anything. It's always going to be like that. It does, like I said at the start of this video, it doesn't matter whether you've been trading for 1 year, whether you've been trading for 20 years or 30 years, you're still going to suffer the same consequences and the same problems. The market's 50-50. How do I choose my key levels? Wow. We're going to go into that. We'll definitely have a look at that in a moment because we've been doing that for a long time. Watch every single one of my videos. And, well, no, the last few have been more about strategy. So you're right. I do have to show you how I choose my key levels. But the earlier ones do show you that. There's a very small amount. No alerts. I mean, so, thanks, Rob. Have you thought about a screener? Hi, Rob. The 4-hour time frame is not really suited for prop firm trading, I think, because of the fact that you can't hold overnight. It depends who your prop firm is. With the ones that I've got, you can hold overnight, you can hold over the weekend, you can trade during the news, you can do whatever you like. It's just, you just got to control your normal drawdown and all the rest of it. So some prop firms are nasty and they don't want you to hold overnight and all that sort of thing, and those are not suited. So don't choose those ones. The ones I use are open to anything and you allow you to choose and use your own system. So this United States dollar South African rand, I took long ago. I took that trade long ago. Where's my positions on this particular account? Is there a date here? There you go. United States ZAR. I took that trade on the 25th of June. That's quite a long time ago, and this is a prop firm account. So no problem. These are the ones that I got in the link and stuff like that. Then there's the other account. Which is over here. Where are we? And here I took Brent crude oil. Is there a date here? Also on the 25th of June. So yeah, this one you can hold as long as you like as well. So no, there's no problem. No problem. Well, almost 15K subs. Yes, we're going over the 15,000 subs at the moment. So there are some people that do like to hear that you're not going to win every single trade, I suppose. Most of the people I thought would never subscribe here or come and watch my videos or whatever, because I'm not telling them they're going to turn $1,000 into $1 million. I'm actually telling them, you know what, you might actually lose in the stock market. But yeah, there's 15,000 subs. So thank you, guys. Thank you for all those guys who subscribed and have joined the channel. Love having you here, and I love having the company. And as I said before, trading's boring, so making videos is quite a lot of fun, actually. It's good fun. Ooh. Okay. Crystal King, hope you're fine and doing great. Any insight on hedging? Thank you. I got lots of insight on hedging. I'll give you that now. Everything clicked for me when I heard your business plan explanation. Thank you. It's a pleasure, Big Chip. Lovely name, Big Chip 33. Love that. Where's Super Earthman today and Sir Lunchalot? You guys. Kaffia Blue, what prop firms should you use? The links are in my description if you want to see what prop firms I'm using. Ari, thanks, Luigi. Hi, Rob, and all in the chat. Okay, so somebody asked me here, hedging. Okay, and somebody also asked me how I pick my levels. So let me talk to you about hedging before we go into how we pick the levels. Hedging, I've, in my time, in all my years of trading and whatnot, tried hedging. And look, on the funded accounts, hedging is not a good idea. It doesn't work, all right? So don't even go there. On your cash account, you get a hedging account where you can hedge. And I've done it before in the sense of when I saw something going against me, and then I would hedge it in whichever way I could to try and lessen the pain. But at the end of the day, it didn't really win me anything. I found that while hedging seemed like a good idea at the time, it was actually better just to take the loss and just completely forget about it and move on to a new trade and try and make the money elsewhere. Just understand that you're going to lose half your trades. Take those losses and try and make the bigger wins. That's why I created that strategy. The hedging strategy never really worked out well for me. I did try. And the one hedging strategy is obviously to hedge on the same product, which is, you know, like if it goes this way, then I'm going to make that. And that doesn't work, because what actually ends up happening is you take a trade, and let's say you take this, you had this long, and it goes short, so you hedge it, and now you're short on one side and you're long on the other side. So now you're basically at a zero at this point. You're not losing or winning anything on the trade while this goes down. And the trouble is, which one do you sell? Which one do you dump at what point? So at the end of the day, you might as well be in a normal trade, because you have to make that decision anyway as to buy and sell. So hedging's not going to make it better for you. You still have to dump one of the trades at some point and take a loss on one of the trades, and then it goes the other way and it makes more loss on the other trade. It's difficult to explain, but hedging doesn't always work. And then if you try and hedge with another product, so for example, two different Forex pairs, then you're sort of still sitting with the same problem, because the type of pair that you're dealing with, when it goes the other way, is going to switch around and go the other way anyway. So you might as well just be trading one way. I don't know how to explain this. This is one time that, you know, normally, guys, I can explain things pretty well, but this is one time I'm really struggling to explain this to you, is that no matter what you do, if you try and hedge it, okay, if you try and hedge a particular trade, whether you're using the same product or a different product, no matter what happens, when the one goes one way, the other one goes the other way. No matter what. And at some point, you have to make a decision. And when you make that decision, if it goes against you, you're going to double your loss, and it's going to be worse than what you started with. It's a bit like, hedging is almost like dollar cost averaging when it comes down to it. I tried hedging because it seemed like a good idea, and it failed dismally, which is why I moved to the strategy of managing the losses and keeping the losses the same, trying to make more on the profits, because the strategy, you understand you're going to lose losses, you're going to take losses, but you're going to make wins as well. And the wins are going to be the ones that are going to make you money over time. But you have to have time. You know, it doesn't happen in a day. So yeah, I hope that kind of makes sense. Then, how do I choose my levels was the other question. How do I choose my levels? What I normally do, guys, is I take it to the day chart. And on the day chart, I'll try and take it to the line chart, because the line chart, you see these points, they give me clear indication of closing prices. And then I'll take a resistance, I'll draw it in, I'll take a support and draw it in on those points. Now, on this case, the support would be sort of over there now, okay? So that's your support level. What is a support? What is a resistance? It's an area where price has got to a number of times, maybe more than 3 times, and it's bounced off of that, which means there's lots of liquidity there. And on the resistance, a similar thing. Every time the price gets there, it comes down. Why is it a rectangle? It's a line. There's no way that there's going to be an exact point where there's going to be money, where there's going to be buyers and sellers saying, well, that exact point we're going to get in and out. It's an area of money. It's an area where people have left a lot of money lying around. And it's not retail traders, by the way. It's the big money. You're looking for the big money's liquidity, because we make up such a small portion of the market. So the bigger portion of the market is the pros, and they leave the money there. And that's where they're moving the market. So that's where you want to pick up the money. That's where you want to pick up the trades. Once you've picked that up on the line chart and the closing prices, then you can take it back to the candles. And I like using the candles because the green tells me it's going up, the red tells me it's going down. Some people don't like the red and green and they change it to black and blue and all the rest of it. Good luck to you. I prefer to see the red and green because it's clear to me which way things are going and I don't have to think about it. Now you've got a support area, you've got a resistance area. So there's your range that it's trading in. It broke out of that range, went all the way down, and now it's coming back up again. So that's on the day chart. But we're trading on the 4-hour chart. So we take it back to the 4-hour chart, and then we've got a different picture. And then we look at the picture on the 4-hour chart and say, well, okay, there's the picture. There's my resistance. There's my support. It broke through the resistance, came back, tested it. The test has failed. It's coming back through this resistance, and it's going short down to the support level. Then you can take a trend line if you want. On the 4-hour, you can draw a trend through here and say, well, if I put a trend through here, I could say, well, there's a level, and that's a trend level, so it's in that bullish trend, and there'll be another trend up here. If it gets down to that level, then maybe the trade will be done. We could actually take a trade on this. So, for example, if we wanted to take a trade on this, is the Nikkei, so we can go short on the Nikkei, basically pick a sell, and then we can say, where would we want our stop loss if we were to pick a sell on the Nikkei? We would want our stop loss up here at 40,000, 41,000. So I'm just going to say stop loss at 41,000. Okay, 41,000 stop loss. That's 5 lots. Let's make it 2.5 lots. And that gives us a $245 risk. And then the take profit we would have at, where would we have the take profit? 38,250. Will it make us a reasonable profit? No, it won't actually. Not at all. It's also a 1-to-1, which is really not that great. Best I can do here is maybe 37.5. Best I can do. Yeah, that'll give me a 365. But yeah, it's a sell. So you take a sell, you place the order, there you go, sell orders in, and then you've got a trade. Now you just manage the trade. Well, that's all you're going to do. You're going to manage the trade. There's nothing else you can do with this trade except manage it. And that's your trade. That's how you take your levels. That's how you place your trade. It's not complicated. So now we're short on the Nikkei, just like that, on this particular account. On the other account, not. All right, so I hope that helps. My experience with trading is if it isn't boring, you aren't doing it right. This is completely true, Nick. I've always said that making money is boring. And if it's not boring, then you're stressing and you're not doing it right. So yes, totally, you've got the nail on the head. Making money is boring. What's fun is spending it and having a good time with it. But actually making it can be monotonous, painful, and boring sometimes. But on the flip side, I enjoy trading. I've always loved trading. So I do it because I like doing it and because it gives me the freedom to do the things that I want to. And then, a lot of people ask me, why do you have a YouTube channel? Well, because I like computers and because I kind of got bored and there's a whole bunch of reasons. So yeah, that keeps me busy. Does things for me. I can't just go and sit on the beach all day or go shopping. Ooh, perish the thought. So yeah, I'm gonna start touring and doing holidays and things like that nowadays. It's maybe going to take you guys with me. Do a bit of fun, but yeah, it's difficult to sit by a computer all day. That's crazy. And since I don't have any hard businesses at the moment or shops or anything like that I used to have, then yeah, it gets kind of lonely. It gets kind of boring. So these live shows take a bit of the loneliness away. It makes it a bit more fun, people to talk to. You make friends, things like that. And I do have a lot of friends, don't get me wrong, but they're all in the pub or they're all at work or they're all doing something completely different or whatever the case. I used to have a group of trading friends that we would talk to all day, but then you also get sucked into that and then you're just sitting trading all day. It's, yeah, it's a different world, guys. If you're new to this, it's a different world. It really is a different world. It's a lonely world. It's it's a different world. Yeah, you'll get used to it. Elaine's back. Yeah, got some electricity back. Good show. Hi, David from Mark. How's it? Um, do. Well, don't you have to use options to make hedging work at all when you go both ways buying the same product? You can do it on CFD as well. Hedging, you do get hedging accounts on CFD as well. But I knew a guy who used to do it with futures where he would, wow, he'd create this whole mathematical equation of buying this much and selling this much and putting it that much, and there was no way he could lose on this options trade or this futures trade. It was quite interesting. I never quite got it. I never quite got into it, but he had a whole formula, a friend of mine, and it was crazy. But it only works on a futures product, and you basically take the option. It's going to expire at that date, and then you buy so many, you sell so many on that, and you put the whole picture together, and at a certain time the price is going to go to there, and it crosses over. I can't even explain it the way he did it because it was so complicated. But he could literally design a trade where he almost couldn't lose. It was crazy stuff what he did. Interesting though, very interesting. Dollar cost averaging works very well when you're buying into periodically rebalanced and reconstituted indexes like Nasdaq, S&P ETFs, or mutual funds. Dollar cost averaging only works if you dollar cost averaging to the positive side. In other words, if your trade's going for you. So if you're going to a profit, then you can buy more. If you're going to a loss, don't dollar cost average. Don't dollar cost average in a loss. It's never going to work. It's always going to hurt you. Good morning, Shania. Well, Mr. King, thank you for the advice. I will work on risk management and hopefully I will get rid of this hedging situation. Wish me a luck. God bless you all and your family. Good health, joy, and wealth. Amen. Yeah, look, whether you're hedging or whether it's actually better just to take the trade one way or the other. Like I say, you're going to have to make a decision on the trade. Free speech. Don't be lazy. We'll soon go crazy. They've just raised the price target from $44 to $48. Hit that like button there. People, let's get it over that 15K mark. I've been missing your lives. Bruman, don't keep missing my lives. You gotta be here, man. You gotta be here. I do trade with leverage. I still trade with leverage. That's I have a cash account where I trade with leverage. They're all leveraged accounts, and I mean, even these prop firm accounts are leveraged. It's leverage trading. Investing is trading one-to-one. So not trading, actually. So it's it's all terminology at the end of the day. Forget about the terminology because you just need to make a profit. But the best way to make money in the markets is to invest in shares. Good shares. That's what I've been doing for a very long time, and that's what you do. Okay? So and every month I add to those investments. I add to a share, a couple of shares, whatever the case, depending on how much free income I've got to invest in those shares, and I just keep letting them grow. They pay you dividends, they grow, they bring you wealth. Okay? Set and forget. But, I maybe look at them once a month, but by the same token, I do keep one eye on the news or whatever the case. If I see one of my companies is implicated in something that doesn't look too positive or something might go wrong, then common sense prevails, and that's the only time that I will sell an investment. So, for example, if it's one share that I can see that company is going to do really bad no matter what, then I'll sell the whole company. I'll sell every share that I own in it, and I'll put it straight into another company. And the only thing it's going to cost me is the fees, which is not much. So that's the only time that I'll sell out of a company. Otherwise, I'll hold it no matter what, through whatever, forever, and I will never sell it. Because if you look at just take the S&P 500 over the last 9,900 years and just look at how it's performed and how it's gone over the years, and you'll see. Now, there's a lot of guys out there that will say, oh, no, you should trade it. You should trade it. When it goes up, you sell it and then you buy it again. But what I've found with shares is that doesn't really work, because you'll get it wrong. You can't time it. You'll always get it wrong. So just leave it, let it grow. And as I showed you on that investment calculator, you'll be surprised how it'll grow. It grows to insane amounts of money, which is great. And then my kids will probably get that. The trading, but why did I get involved in trading? Well, firstly, because I enjoyed it. And I thought it would keep me more busy than the investing. And I thought it would be something to do. And it is. But it's just as boring as investing, really, because once you start trading the higher time frames, like the 4-hour and the daily, then eventually you're not really doing anything either. You're just sort of choosing a trade, leaving it in, and waiting for it to play out. And as you see, it can take days to play out. So then you end up forcing yourself to trade on 5-minute charts, and then you lose the money, because on 5-minute charts you will lose the money, because 99% of us lose the money there. Why? Because we're not moving the markets. The pros are moving the markets. We're not moving the markets. So yeah, that's what it's all about, guys. Did not trade yesterday. I have a couple of trades in today. My target's $500 per week. David, I just want to mention one thing to you. I think I've mentioned it in my videos as well. And I noticed you said you've got a target of $500 per week, and that is excellent. But I myself prefer to have an annual target. But a weekly target is great. But, the best laid plans of mice and men is, like I say, it's very presumptuous of us to have a target, because all I'm going to ask you is one question. What do you do if you get to the end of the week and instead of having $500 profit, you have $500 loss? What's your plan for the following week? That's all I'm going to ask. Okay. That's the problem with short-term targets. Okay. And you've got to have a plan. And for example, even if, like myself, I have an annual target, and if I don't make that, what am I going to do next year? I've got to have cover for that, at the end of the day. Or am I going to try and make double next year what I made last year? Well, that's impossible. If I didn't make it this year, how am I going to make it next year? Just saying. So watch for those targets. What's your plan? What's your plan? Okay, and then Shane says, that's great, you must have a good size account. Charlie Munger always said the only company he would never sell was Costco. Oh, then he must have loved Costco. Shane, lately I seem to do better after 1:30 p.m. when the USA comes online. I trade from Johannesburg in South Africa. Yeah. It depends what you're trading. Depends what you're trading. If you trade Europe, then you can trade from about 10 o'clock in the morning. 9 or 10 o'clock, it's fine. David, may I ask your account? At the moment, I have a $200 account as a leverage is 500 to 1. My plan for the following week is just $500. The previous week is history. Okay, David. Yeah, no, that's it. So you've lost the 500. You accept it, and then next week you're just going to try and target 500 again. That's the only way to do it, because that's what I do on an annual basis. If I have a target for the annual basis and it doesn't work out, then next year I look at what targets are achievable and go with that. That's the only way to do it, because that's the difficult thing about a target is if you don't make the target and it goes the other way, what do? You have to make a very conscious decision as to whether you're going to accept that loss and just move on, or are you going to try and pummel your way to get it back, and that can be disastrous. And you know, if you go 3 in a row where it goes bad, it can start becoming psychologically destroying. And even the best take losses, and that's something that people don't get. The US market's a bit late for me. I usually trade when the German market's open. Yeah, you see, I have a policy of what I used to do a lot is trade shares in the South African market, which I don't do anymore. Because then I would be, how can I put it, trading through the day from 9 o'clock till 5 o'clock. That was something that I did. And then I stopped trading shares a long time ago. That's probably even 10 years ago, 8 years ago. I just said no more share trading, and I only invest in shares. But that leaves me with trading indexes. It leaves me with trading Forex and crypto and all those things, because there's enough there to trade. But then time becomes an issue, like you say. And I like the American markets open for me 3, 4 o'clock in the afternoon. And then depending on the time of the year, the European markets 9, 10 o'clock in the morning, depending on the time of the year. And it becomes a mishmash of issues. And then because all of those markets are traded overseas, not here. So yeah, what time of the day do you trade? So I just, you know what I do? I just look at the market, I position myself, I trade that way, and that's it. I don't worry too much further about that. I just look at the market and say, well, there's the position. I'm going to position myself in the market at that time and look at how that's going. For example, you know, because you're trading on the 4 hour, if you want to trade on the 5 minutes, that's different. Then you should wait for the time of the day. But if you're trading on the 4 hour, position trading on a day or a weekly or whatever, then you can literally just trade whenever you feel like it, because the markets are open. So it's not a problem. It's just pre-market is the issue, you know, sort of. For example, you can trade a bit of Brent or gold or whatever the case, but the S&P 500, you kind of want to wait until it opens up later in the day. And you don't want to sit here trading late into the evening. So, I mean, I shut down in the afternoon and I go and do my things. So, and I just leave the positions. I leave the positions running. I don't sit and trade through the evening because the US is open. I would have to trade till 11 o'clock at night, and I don't want to do that. Yeah. My plan for the following week. Well, when investing, I prefer buying something once a month. That's exactly what I do. I basically look at my portfolios once a month. I don't often buy a new share. Because I've got for years and years and years. So what I'll look at is which one I feel like adding to effectively, or maybe two. You know, maybe I'll add to 2 of them or whatever, and split the amount into those 2. So I'll just see how much I've got for that month, and then I'll add it to those shares. That's every month, as far as I can every month. Okay. Cafe Blue asks, do you use indicators such as a simple moving average or an RSI? And the thing is, I used to use indicators in the past. I used systems in the past. I used Ichimoku. I used Fibonacci. I used the MACD. I've used stochastic systems. You name it. Been there, done that, sold a few T-shirts and used it. Moving average crossover. Great. And the thing you've got to understand about systems is every single system in the market is 50-50. Every single system in the market works because some genius designed it and backtested it and said it's going to work. They all work. The difference between maybe a moving average system and maybe price action is that a moving average system would be a lagging indicator. In other words, by the time the trade's taken, you're only going to make a small portion in the middle, but it works. Doesn't not work, it works. Thing is, with all these indicators is it becomes confusing. It becomes overbearing if you use too much of it. So it's my personal preference to have as little as possible on the chart. My personal preference to have a chart that's pretty clean with nothing on it. And in fact, I don't even like having this volume thing on the bottom here. I just haven't taken it off. But you can trade with volume as well, by the way. And it's much of a muchness, whatever system you use, because you just have to understand that you're going to separate these lines from your strategy. But you need these lines to apply your strategy. But the system is different from the strategy. And the system is just where you're going to pick your trade, where you're going to pick your high probability trade, and where you're going to draw a line in the sand. And then you're going to start applying the strategy and your business plan to manage the trade. Now, when you say do you use things like moving average, RSI, you know the pros, the guys with the big money, the 95% of the traders, the trade, and the banks and things like that. If you'll be shocked and stunned if you go and look at how those guys trade. These guys that have been to university perhaps and trade with billions, and you'd think, oh, they'll have all this stuff on their charts and all these lines and that. They got nothing on their charts. In fact, most of these guys, you'll be surprised to look at the chart and only see an RSI. And an RSI is telling him it's overbought, it's oversold. So it's oversold, I'll buy that. Billions, and look for liquidity on it. Oh, it's overbought, I'll sell that. That's it. There's nothing else. Not even like lines or trend lines or support and resistance. They're not even worried, just RSI. Old stuff. Or a moving average, like, oh, it's above the 20-day moving average, so I'll buy. You know, it's crazy how these guys operate. When you see that, it brings reality in. That aha moment also comes, and you're like, wait a minute, is that how these guys are trading? What am I doing? Why have I got all these lines on my chart? Why have I got all these systems? Why have I got 42 screens on the wall? What am I doing? You know? Then you realize you don't need all that. You just don't. You're taking a trade. It's 50-50. It's all in the management of the trade. I've told you guys before that was the turtle traders, if I remember correctly, that would 20% of their trades, and they made more money than anyone else on the street. And nobody could understand that. That's because they weren't worried about a win rate. They weren't worried about the edge. They were worried about managing their trades. That's all they did, was manage their trades. And then they made the money. I didn't make my system up. I learned from them. They're the ones that give you the insight, the aha, like, hang on, that's how these guys make the money. So yeah, no, I've traded with those indicators before. I've used those indicators before. I can give you lessons on how to use those indicators. I can make videos on how to use those indicators if you like. I don't mind, but I just don't use them anymore. I've tried shares trading, but even when you take a profit and it goes down 10% and you buy again, it's not really worth it. At least here, commission fees make the trade into a very small profit. Yeah, you can make money trading shares. Believe me, I've done it. I mean, before there was computers, I traded shares, and on a one-to-one basis at that. You can make money trading shares, but, you know, similar to this, patience, fear, FOMO, all that. It's shares are easier to trade than indexes, Forex, and crypto, and all that, commodities and what have you. They move a lot slower, so your patience level is an issue with shares. Yes, I'll start by watching the charts before I pick a trade. Yeah, obviously, yeah, you've got to look at the charts before you pick a trade. Do you take news events into consideration before deciding to take a trade, not specifically as fundamental analysis, but more for entry price, etc.? Rumango asks that, do I take news events into consideration? What I look at in the news, and obviously I keep my eyes on the news, it's just a natural course of things. There's no way around that. I mean, there was a time when I said, I'm going to take the news out of my trading completely. I'm never going to look at the news again. And 5 minutes later, I'm like listening to the news. There's no way you can get around it. There's no way you can push it away. It's always going to be there. And it's always going to be bothering you. Nothing you can do about it. But what I do push away is the weekly news, the jobs figures, the CPIs, the Fed announcements, and all that rubbish. I throw that aside because it's every week and it drives you insane. And every time they announce it, it shoots up or it shoots down, and then it goes back to where it was. It's like a yo-yo, man. It just goes back to where it was, without fail, every single time. And many years ago, I realized this. I realized that I was wasting my time because I would sit on with my hands and I'm waiting for the CPI. I'm waiting for the jobs figures. Oh, what's going to happen? And then the jobs figures come out and they're good. And you're, buy. And then it goes the other way and you're, what happened? Yeah. It's because that's not what moves the markets. What moves the markets at the end of the day is a large money flow from the reserve banks and the asset value of the country and that sort of thing. And obviously the companies themselves. That's not going to change no matter what. That's always going to be, just because you get a certain job figure or CPI or whatever the case, is not going to change the profits of NVIDIA in 5 minutes. Definitely not. It might change the outlook for a year or 5 years or something like that, but it's not going to change the outlook now. And that's when you realize that those kind of news events are sort of a waste of time. They're not going to get you much unless you're trading on 5-minute charts or you're just trying to scalp or trying to pick up something out of it. But the overall news events, like, for example, when Donald Trump starts announcing tariffs, when geopolitics come into play, bigger things happen in the world, a bank starts to go bankrupt or something like that. Those are important news events. Those you want to keep your ear to the ground on. Those you want to listen to. A government decides they're going to take over Bitcoin, stuff like that. That might be something you want to keep your ear to the ground on. So yes, news events are important when they're important news events, but they're not important when they're these weekly things that come along and the things that they run down the side of your screen on your brokerage program, and they're like, this is happening, this is happening, this is happening, this is happening. Ignore that. It's a waste of time. It's going to destroy you. What you're looking for, and all you're looking for, is those big things that are happening in the world that might change the world. Now, the reason a lot of traders had a lot of difficulty this year, in my opinion, and it's only in my opinion, is because there was no normality in the markets. In other words, we normally have normality in the markets. We have news events, we have things happening, but they happen and then they stay happened. And you just run with that. And you can correct for that. But what was happening this year was, for example, Donald Trump would say one thing now, and 15 minutes later, he would say the complete opposite. And that's very difficult to work with because there's no normality in it. So what he did was he ripped the normality carpet out from underneath the market, and things started like just becoming a mishmash of information. The information wasn't good. So now the information is no longer reliable. So it starts by spiking up and down, and then it just starts like grinding to a halt. Nobody knows which way to go. So that hurt, I think, a lot of big traders this year. And also the geopolitics were, I expected that wouldn't go far. I knew that. I was like, yeah, okay, this is going to happen. But I also was surprised to go into a weekend of giant geopolitics and come out on Monday morning and nothing's changed. Everybody's just happy to hold. That surprised me. I was actually quite surprised by that. I expected more fear in the market, but fear doesn't seem to be as big a thing these days as it used to be. It seems people are not as fearful. So there's still a big shock to come for a lot of people. I think we're at a point in the markets, because in the past, I had a measurement, and that was just about every 10 years we would have a crash. Decent crash. A serious crash. You go back and you can have a look at history on how that worked up until about 2008. And then there was 2020, so it was a bit late. Every 10 years, bit of a crash, bit of a crash, bit of a crash, bit of a crash. And at that point is where people start to become overconfident in the markets and feel infallible. So it'll come again. Just go back and have a look at it. It's just about, I wouldn't say it's like exactly 10 years, but it's pretty close. Just about every 10 years, there's a crash in the markets, or a serious correction. Serious correction. I don't think we'll ever have the 1920s crash again, but a serious correction. I mean, too big to fail. When the 2008 came along and they started putting money in the markets, kicking the can down the road, that can, it caught up. So yeah, no, but I'm looking at it now, and we're only a few years in, and I'm seeing that the fear is not there. I don't know if it's a lot of new traders in the market that haven't seen this before, but if you've been involved in a crash or two or three, then you know what they're about, and you become more nervous. So I was, I'm pretty surprised when I come out on Monday morning and everything's fine. But I also knew that we're only a few years in, so I wasn't expecting too big a crash just yet. But there will be some big corrections still to come on the way there. Sir Lunchalot. Ah, there you go, Sir Lunchalot. There you are. I missed you for a moment there. Good to see you again. Lovely. Good to have you on board. Trump changed the news cycle. His X tweet so impressive in the way it can move the markets. Yeah, it can, eh? Yeah. Similar Turtles mostly use the longer term breakout system, lol. Yeah, well, they had their strategy and it worked. Boom, boom, boom. I remember now they used trend trader. They were trend traders. Yeah, whatever system they used, they made more on their wins and lost less on their losses. Trump cost me money during this first term, and now it's cost me some money this term. Profits turning to losses with tweets. But in the first term, actually, Nick, in the first term, he actually made me a fortune. I did so well with him in the first term. It wasn't because of him, but I mean, the market, I don't know if you remember, but the S&P 500 just went up. It just kept on going up. And I just kept on adding and adding and adding and adding. And I had to sell it all when Biden came in, because it started to turn over and come back. So the first term, I got to say, he made me an absolute fortune. So, yeah, but this time, wow, I don't know what to say this time. Really difficult this time. Turn as your friend until it turns against you. Well, exactly what I just said now about Trump's first term with the S&P 500. The S&P 500 was in a trend, and I was playing that trend, and I was just adding to that trend in contracts on leverage trading, and it was making a killing. So it did really well in that first term. Always run a stop loss and know when to get out of losers sooner rather than later. Yeah, the sooner you can get out of a loss, the better. But as you can see, I'm holding on to my United States dollar, South African rand, and I'm not letting go, because I'm still very confident that the South African rand is rubbish. Yeah, I don't know what's making it so strong. It's not great for my investments, because my investments are mostly in dollars and stuff. So I'd prefer for it to get a bit weaker. It's better for my investments. I'm in crypto. We have crashes every few years. Bruman, don't you have crashes like every few days? No, I'm just joking. But crypto, yes, crypto is quite volatile. I know crypto is quite volatile. But, I've got my opinions on crypto, and my opinions on crypto are pretty straightforward, and that is I can't see the asset value in crypto. Where other people try and explain it to me, I don't see the asset value in crypto. I don't see the point. I see it as traders trading against each other is all. There's no real asset value to it. There's no holding on it. And I see crypto as something that could actually, you could wake up one morning and the bubbles burst and it's gone. So I do have my caution on cryptos, but crypto's made people a lot of money, and it's a tradable product, and that's what we're about, tradable products, because all tradable products are basically traders trading against each other or with each other. Just the difference is if you buy a share and invest in a share, at least I know there's a company behind it or something holding on to it, but that can all change as well. So everything's got its risk factor. It's just that I just don't see crypto as something tangible, something you can hold, something that's real. But it has become a situation of, in most, like Bitcoin, for example, not some of the others, not Farcoin and all that, but Bitcoin, for example, has become too big to fail. If that fails, there's a lot of stuff that gets dragged down with it because there's a lot of people invested in it. JP Morgan, BlackRock, Morgan Stanley. We're talking some big names here. So yeah, you can't deny that it's too big to fail, that it's massive. But I still feel that there isn't something tangible holding it up. Yeah. If you have Blue asks, what are your thoughts on price action patterns? You do understand that the way we trade here, with support and resistance and trends and whatnot, is basic price action. That is basic price action. What you might be asking is patterns, like head and shoulders, flag patterns, things like that. Okay, and yes, we trade with those. Obviously, we use patterns such as that. Are there any here? Don't see any offhand, but yeah, you get patterns like head and shoulders, cup and handle, that sort of thing. You can download them off the internet and you can see them. And what you got to do with patterns, what I do with patterns, you can do what you like with them. To actually trade off a pattern is, you're not going to get that many trades. You're going to be looking for trades in all the wrong places. What I do with patterns is I identify them in the market when I'm taking a trade. So if I go into gold and I say, I want to take a long on gold, and it looks really good, I think I'll take this long on gold, and it says to you there's no pattern. I just want to do something here quickly. I just want to check something. Yeah, that's fine. Yeah, sometimes people try to get hold of me. I look at this and I look for a pattern, and if there's a pattern here that says to me, take this trade or don't take this trade, I will look for that pattern. Sometimes you see them, sometimes you don't. My favorite patterns are head and shoulders, flag patterns, cup and handle, things like that. But there's a lot of patterns in the market. There's like so many different ones. Download a little page off the internet. I think I do have one of my videos actually discusses patterns at length as well, somewhere in my system, so you can go into that as well, all about patterns. And yeah, no, patterns, you can use patterns to give you a bit of information on the markets. Absolutely, I do as well. But I don't trade with patterns per se. I don't say, ooh, there's a head and shoulders, I'm taking a short there when it goes past the shoulder or anything like that. No. If there's another confluence there, like my support or my resistance or my trend line breaks or something like that, then I'll have a look at that. I'll look into that. But other than that, no. The patterns, I just identify them, I see them, and I take caution with them. So yes, trade with patterns, use patterns. Yeah, what I'm doing now with stocks is setting up trend lines on the weekly, look at the daily chart, and as you say, slow. It's definitely slower. But there's nothing wrong with slow. Nothing wrong with slow as long as it's making money. Making money is boring, guys, really. Okay. David, I'm now retired and I'm able to use some retirement capital for trading. And be very careful of the retirement capital. Whatever you do, David, don't lose it. Uh, you know, any money that you don't want to lose, rather put it into sort of an investment trading portfolio and let it invest and let it grow. Be very careful of how much you put into actual trading, because if it goes pear-shaped, it goes pear-shaped rather quickly. So just watch out the risk, particularly if it's a retirement amount, because retirement amounts are not recoverable, and that's always the problem. So what I normally say to my retired friends who come with retirement packages and they've got money, I'd say, rather than trying to time the market, just put it time in the market. I know you're older, but if you put it in there, you get the dividends, you get the growth from the shares and that sort of thing over the next number of years, and your portfolio grows in that. And then take a smaller portion that you're prepared to risk and trade with that and see how that goes. But before you do that, buy yourself a funded account and trade with that and see how that goes. And if the funded account doesn't work out, you lost $1,000 or $500 or however much it cost you, and you can walk away and say, well, I didn't lose my pension. Or you can just buy another one and try again until you perfect it and you get to the point where you feel that you can be profitable with it and you can make money from it. Then you can start trading with that pensionable amount. But before that, I'd be very careful how I work with my pensionable amount. Now, for me, I never worked for a company, so I don't have a pension like you do. What I have is a share portfolio that I grew myself over many years, and that is my pension, and that's what keeps me going. I don't need to work. I don't need to trade. I don't need to have YouTube videos. I don't need any of this. I can just sit on the portfolio. But who wants to stop doing that and just sit around and rot? So you want to keep going and do something. So take a small amount and learn how to trade with it. Like I say, I would recommend, if you can, with say some funded accounts and that sort of thing, learn how to trade properly. Make sure that you can trade properly, and then before you throw all the money at it. Just my 50 cents worth. Okay, that I always say, always be cautious. Ruben says, putting stocks on blockchain, now you'll be trading on crypto soon. Okay, theft, yeah, next one. Got to run, everyone. You guys make them profits roll in. Don't forget to hit that like button before you go. Thanks, Daniel. Take well, keep well. See you soon. Stay profitable. Ciao, David. David, I planned something similar to what you suggested. Chainlink reveals compliance standard targets institutional crypto flows. Yeah. You see, what you've got to be careful of here, Bruman, is, the whole idea of crypto, and I know that the whole idea of crypto was to, let's say, separate themselves from the government and get away from that government control of the money. That was the idea behind it, so I believe. I mean, I'm not a crypto guy, so that's just what I heard. And everybody said, oh, we're going to do away with, our money's going to be separate from the government. Have you noticed that the government's starting to dip into your crypto? The government's starting to put their fingers in there. They're starting to regulate. They're starting to take control. And believe me, they're planning to take control of everything. And there goes your whole concept of crypto being separate from the government and being able to hide your money and all the rest of it. Ain't going to work, is it? Because the governments have realized that, well, hang on, here's a opportunity to make some more tax. They're dipping in there, and they're going to take it over, and they're going to control it, just like every other currency, and there's nothing you can do about it. So yeah, while it seems great, it might as well be the US dollar one day, because they're going to climb in, take it over, attach it to something, and then you're not going to get away with anything. So yeah, keep your eyes open. They're coming. They always come. It's what they do. And yeah. So you don't think they're going to let us just get away with it now, do you? I never thought they would ever. I always wondered when they would come calling. In fact, what I actually thought they might do is create their own digital currency, because I know they want to do away with paper and that sort of thing. And I mean, we've already moved to the point where you pay for things with your cell phone and your smartwatch and all the rest of it. And so effectively, even dollars and pounds and all the rest of it are digital currency as we speak, even though you can still get notes. But effectively, in the long run, they want to do away with the notes. Obviously, they want to do away with the paper money and the coins and that sort of thing. And everything will be digital. You know, if you go to China, you have to pay for everything on your phone. You can't pay cash in most places. You still can, but in most places not. So that's where the rest of the world is moving towards as well. So I did think that they would effectively turn the dollar into a digital currency on its own. I didn't actually think that they would start climbing into the blockchain and climbing into the Bitcoin and crypto and that sort of thing. But it would appear that they are. And it would appear that they are now sneaking into that area. So yeah, you can expect them to be there. Yes, and that's why I'm talking about it, Lovely Mango, where you say you already started in RSA with new crypto regulations. That's why I'm talking about it. I've noticed that. They're already with us here in SA, catching us out on the regulations with crypto. You can't just move crypto anymore. Yeah, fill in some documents, some tax documents. They catch you out. Okay, so on gold, we're long, eh? Shane, we're long on gold. Over here, we've broken to the upside. Let me just have a look at your email if I can find it. Go and check it out. But we've taken a long trade on gold. And let me see if I'm wrong. Let me see if Shane is telling me to go short. Actually, if Shane's telling me to go short, I'll be chuffed, because then I know I'm good for a long. Let me have a look at Shane's thing here. Old spot. You put a fib on it. And let me see if I can see it. Oh boy. Okay, I'll see what you've done here. Yeah. Well, hopefully that doesn't turn against me. Yeah. Okay. See what Shane is saying to me is, yeah, there's a bit of a sort of a Fibonacci telling me that I'm heading into that zone where it might turn around, but it has actually broken to the upside on this trend. So yeah, hopefully it doesn't turn around here. Okay. Circle is US dollar, black digital currency. What I'm seeing, you know, I don't want to put a fib on here now, but if I do, what are we going to get? Let's see if, you see what it's actually doing here, Shane. It is heading into that level. It is heading into that level on this side. And it could turn around at the 33.72 level as well. So if you look at Fibonacci, that could have an effect. Could have an effect. But I'm staying with a long. I'm staying with a long. Everything's a 50-50. I'm staying with a long. We're above that. It's broken structure. It's going to the upside. I'll keep an eye on it when it gets up here and see what it does. Because there is a level here as well, you know, that you've got to worry about. But I'm looking at it as it's broken up. It's got a trend. It's going up. Let's see what it does. $33.50. Yeah, you see, there's a level here at $33.50 that is a bit of a worry. I could be in a bad trade. We don't know. But then I want to overthink it again. And then also, like I say, that 33.70. You know, if you look at the fib, could also be a bit tricky. But yeah, it is what it is. Let's see how it goes. Maybe I get lucky and it goes all the way up and this trade makes a profit. For a change. For a change. Yeah. No, we don't want to lose all our profit on this account. Yeah, come on. Did I take it on the other account? I hope I didn't. Let me just see if I've got this trade on 2 accounts. And then I didn't take it on I definitely didn't take it on the big account. That's for sure. I know that. Let's just check this one. See gold. No, we don't have gold there. What do we have here on this one? Here we've got Brent crude oil and, oh, the JAP 225, of course. Yeah, okay, that's cool. So this one is there. Alrighty. Good. What's your thoughts, Shane? Are we going to go short? Oh, no. Yeah, just my luck. Take a long trade and then... But look at that. You know, it just looks kind of like it wants to go to the upside. That 33.50 level is a level to worry about. That 33.70 level as well. Kind of hoping it pushes through there. The trouble with the 33.70 level is there's a supply of money. So supply and demand. There's a supply of money right there, that 33.70 level, which is probably going to give me a headache. We'll have a look at it and we'll see what it does. There's nothing wrong with getting out of a trade early if we have to. We'll just see which way it goes. But we've only taken it on the other account anyway, so that's fine. We'll check it out. So we did go over stop loss today. We did go over entry and exit. How to enter and exit a trade, trailing stop. What else did we go over? Quite a number of things, actually. But one of the most important things, guys, is just to understand that you need to separate the lines from the strategy. A lot of people, I'm getting a lot of comments from people where they don't seem to understand that you need to separate the lines from the strategy, or why it's like that, or why the market's 50-50. So I'm going to keep on hammering on that because it's important to do so. It's very difficult for people to figure it out. Very difficult for it to figure it out. So let's just see. I'll keep on trying to explain to people that you can't win with a win rate, and you can only win with a business plan and a strategy. But like I say, it's no easy task trying to explain that. It's quite complicated at best. Let's check something over there. That's a bit weird. Going on there. Yeah. Okay. But I keep an eye on all the charts. So how many accounts you got? Got a few. Yeah. The cash account's the most important one, though. But that one I never bring up here. But keep an eye on things. I don't think there's really... What's your thoughts on Bitcoin, Bruman? What's your thoughts on Bitcoin at the moment? Because what I'm seeing on Bitcoin at the moment is this insane sort of 110,000 level, and of course the 100,000 level down here, and it seems to be just sort of sticking around in that range for now. Doesn't seem to be going anywhere. I don't know how the other coins are doing, but yeah, I only trade Bitcoin if I trade crypto, and doesn't look like there's anything to trade here. It might go short back down to the 100,000, might go long back up to the 110,000, trade at the top, trade at the bottom. It's just trading in the range. So effectively, all I'm seeing with Bitcoin at the moment is trade it down, trade it up, trade up, trade down, trade up, trade down. That's all I'm seeing with it at the moment. Nothing much happening. Interesting that though. It's unusual because I expect Bitcoin and crypto and that to be much more volatile, and it's just in a range. Sitting there waiting. Maybe it's waiting for the government to take over so it can do its thing. Ruben says it's going to drop. Right. Advice from the crypto expert. Yeah, I was also looking at that and thinking it's falling over, isn't it? Eh? You know, if you look at it, it's kind of like falling over here, and it's showing a lot of red heading to the downside. There is a bit of a level here, but I think if it breaks through that level, it's probably going to head down to the 100 again. But I'm wondering if it's going to break to the downside or to the upside of this range. Would be interesting. I'd like to see it break to the downside, come back down to about 70 or 80, and I'll actually buy some, try and make some money out of that. Do you also use a weekly time frame? Absolutely, yeah, totally. The weekly time frame can actually give you a lot of information on a trade or trades for that week. So what I'll sometimes do if I've got time on a Sunday or a Saturday or a weekend is I'll go through my favorite trades and I'll have a look at them on a weekly chart. And on the weekly chart, you'll see there's one or two videos that I did bring out on a weekly sort of what I think for the week sort of thing, but it wasn't very popular, so I didn't make any more videos on that. I don't want to waste my time on that. But you'll see that I made a couple of videos on that, where I actually do go and I look at the weekly and I say, if I look at that for the week, this trade looks bullish, then I'll take it back to the day, see what it looks like that. Take it back to the 4 hour. Then during the week, I'll know on that trade whether I'm bullish or bearish. I don't have to keep looking. I know that, for example, that's going to be a pretty bullish trade based on the weekly. So I expect it to go long over the week. So when I'm trading on the 4 hour, I'm weighted towards bullish because the weekly showed me it was bullish at the beginning of the week. And then I'd rather take long trades on that trade, for example. So for example, if you go to gold and you open it up here and you go up to the daily, that's pretty bullish. And you go up to the weekly, that's pretty bullish. So you know that gold is bullish. So my bias to trading on gold is long. So when I'm taking a trade, this morning I was looking at that and thinking, well, if I get a red candle there, do I actually want to take the short? Not really, because I know that this is probably going long. And then it went green, it broke through the level, gave me a green candle, so we take the long trade because it looks like a decent long trade because we looked on the weekly. We know on the weekly that it's long. So yes, that's what you use the higher time frames for. Same reason you use the lower time frames. For example, if you're not quite sure if you want to get into a trade, you can drop down the time frames and see what they look like on the lower time frames as well for a sniper entry. Do they conform to what you're looking at on the higher time frame, for example? Okay. Going to drop under 100 before it moves. BTC looks like a short pattern to me. Waiting for Trump. It's in a flag. I've sent an email for BTC. Okay. The BTC looks short to me as well. I actually think it will go short. I'm actually hoping that it'll drop below the 100 and give a nice entry point. And then when I look for a nice entry point and actually have a really nice trade on the BTC. I'm looking for BTC to go right past the 100 all the way. That'll be nice. That'll be a really decent trade, and you can get a nice long trade in again on the BTC. That'll be decent. So I hope you guys are going to join me on Thursday again, and we'll have a bit of fun on Thursday. And in the meantime, you guys can watch my other videos, which are hopefully not too boring for you. I hope they're exciting. I know I'm not the most exciting guy on YouTube, but at least I'm here, and I'll try and help you guys where I can. Shane sends me an email from time to time with a chart. You just, on for example, most trading programs have it. This one lets you take a photograph, and you can click it and just send it through. And then I have a look at it. But I am going to head on my way now. I'm going to be off, and I'm going to be doing my thing. So I want to thank you guys for being here today. It's been fun as usual. And like I say, I hope you guys are going to join me on Thursday again. Thursday is at 1400 GMT plus 2. I hope you guys have enjoyed the show. I hope it's been worth your while. And I hope I haven't wasted any of your time. Which I'm sure I haven't. Pretty sure I haven't. Obviously, if somebody watches my video, they watch it for a good reason. They're not watching it to waste their time. Right. Thank you, everyone. As I always say, keep your feet on the ground and reach for the sky. Make lots of money. Make lots of profit. Thanks for joining me here today. Thanks for being company and being around. I'll see you guys on Thursday. Have a good one. Cheers.